Okay, so good evening, dear participant, and welcome on behalf of Swiss Finance. I'm very pleased tonight to welcome to this online event, which is a joint event between Swiss Finance Technology Association and Blockchain and Politics Meetup Group. Blockchain and Politics Meetup we already made 2 years ago. We are used to collaborate, especially 2 years when we made an event at University of Geneva, also on the topic of blockchain and regulation. So we're very happy that they contribute and collaborate to build this joint event. On the topic of fintech and smart contract, where are we? Before to go to the presentation and different keynote speakers, I would like just to share some words about the association. My name is Gabriel Lemon, and I'm the head of the Western chapter of the associations, so mainly the French-speaking part, and also supporting events which are done. Few words about the associations. So how we define ourselves. So we are an independent association representing of gravity to foster the development of the Swiss fintech ecosystem. This is what we would define as our mission. So how does the organization is made? So everything is built around our community, and community is built on different stakeholders. So for us, stakeholders are made from experts, individual, fintechs, mentors, and students. They could be national partner, international partners, partnering with equivalent fintech association abroad. And in Switzerland, we are organized around a local chapter. Mainly, we have in Zurich, we have in Basel, and we have Romandy, which is covering mainly Lausanne and Geneva. And what do we provide? So we provide some expertise on the topic of the fintech. We share educations. We organize some events to help the people to connect to the other, to connect to I would say to the different topics, but also connect to the people and to the community, supported by marketing. So the different areas we are covering are very, very wide, but some of them we could mention as blockchain, insurtech, regtech, neobanks, big data, wealth tech, quantum computing, which was our previous event, artificial intelligence. Also very important is about women in innovation, as we it's one of our core values to be an inclusive associations. And yeah, everybody has a potentiality to bring value to the community. And last topic is also everything related to the digital assets. We make some offline networking events. So obviously it was before COVID-19. So we are very excited in the idea that we could expect in the coming months again to be able to organize such events. But connecting the people is for us very important and one of our core value. We have also now started with online event. Here you have an example with Women in Innovation event, which has last January. Which has helped us also to keep connected our community and even growing our community. So I think the future will be probably made of this both format of event. And how do we market and promote our association? So we use professional social networking platform like LinkedIn. We have also activities on Twitter, Facebook, YouTube channel where we are streaming at the moment. So you will have also available as a replay after the presentations. And you can also join our newsletter to stay informed about our future event. If you accumulate now all these channels, the people who are connected to this channel, LinkedIn, Twitter, also all the different network of our, I would say, a board member of the association, it means that directly or indirectly, it is more than potential 40,000 people we expect to reach with our activities. Here you can have a small snapshot of our members. So with them we made some events. We can mention Lend, Via Cash, or Radar Payments, or even Metacore or Nexus. It's just a very small snapshot. And yes, we are happy to welcome also new member, as mentioned, member as individual or as corporate, as startup or as students. Just visit our internet website to join us online. In which field our members have some activities. So briefly, we have about the topic of lending, insurtech, the payments, the cash solutions, women and diversity in finance, crypto and digital asset, blockchain, sustainability, and environmental and social and governance are activities of our member or sometimes also of our partner. So what I really invite you is to follow us and join us on the different media channel, which I have mentioned. Subscribe to the Swiss Finance and Technology newsletter. Visit our website. Even more, like I made a few years ago, join the association as an individual or even contribute to the association. So just reach us and follow us on the different other media channel, Twitter, Facebook, YouTube. So now I'm just at the end of the presentations, and so I will now hand over directly to Olivier Naret. So as I mentioned, Olivier Naret is the leader of a meetup group based in Geneva, which is called Blockchain and Politics. This meetup group has already collaborated with us. We are very happy to make here an additional collaborations. And now I would like to hand over his view on the topic. Will be yours when you turn on the camera. I start.
Thank you very much, Gabriel. So let me share my stuff as well.
So
there we go, and hopefully you can see it.
Yes, so fine. So you can, Olivier, welcome.
Hear me properly? Yeah, can you hear me?
Yeah, it's fine.
Okay, terrific. Thank you very much for the nice introduction, Gabriel Lamont. I will keep pointing out the last names of people I talk about because they have we have people with the same first name to Gabriel this evening. So that's not being rude. That's just to differentiate between them. Anyway, so I'm really happy to be here and collaborate again with my friends of the Swiss Finance and Technology Association. So this evening we have the topic Fintech and smart contracts. Where are we? Yeah, so we'll be asking questions. We'll be providing some answers as well, but not all answers. I mean, this is a very open topic, I suppose. There's a lot to ask about as well, and comment and speculate about the future. So we'll have. I will go through very quickly the names, and we have the policy now that they introduce themselves more in detail, because they're all involved in various projects, and I think they much better at introducing. So we have Fabio Bonfiglio just after me. He's a consultant in smart contracts, and we have Gabriel Jacques, who's a professional researcher about smart contracts, a PhD candidate in the topic, is also involved with the Crypto Valley, and we'll have Julien Guiton, who's been a computer engineer for 20 years and an early adopter of Bitcoin. So stay tuned. stay tuned, and you'll have all those fantastic presentations, I suppose, in about 10 minutes. And yeah, before I start with my introduction and little, sharing my thoughts, stay tuned also because of September 2021 this year. We will, with some other organizations, we will hopefully be able to have a face-to-face conference on smart contracts. So because of the pandemic, it's not yet confirmed, but we will inform you in due time. So just a few words about my humble and modest person. I am otherwise a strategic consultant. I work with a company called Hendricks and Schwarz, doing corporate positioning, public relations, public affairs, with a regional focus on DACH, which is the region Switzerland, Germany, Austria. And I am based in Geneva. I'm from Geneva, and I have a background in with international organizations here in Geneva with the United Nations system in the field of trade, promotion, business to government relations, advocacy. So yeah, let's jump into it right now. And if this is working very well with Remo, you can see the vending machine, which is the forerunner of smart contracts, isn't it? You insert a coin, and that gives you the right to choose a drink, and you choose the item, and the drink comes out automatically, right? So we're all familiar with that, and this is basically the image we give as a basic understanding about this idea of automation and automatic execution of contracts. So smart contracts are called smart because they allow peer-to-peer transactions more or less directly, and they execute more or less automatically without an intermediary. And the idea here is that they reduce transaction costs, for companies and for users, for everybody who's involved in the transaction. So when Nick Szabo, and he's the inventor of smart contracts, as we like to say, he defined smart contracts, and Gabriel Jacques, GJ, is going to be more in detail about this later on, so I'm not going to go into the definition too much in detail, but basically he defined smart contracts in the 1990s, and back then the technology was actually missing, to deploy it properly. Today with the blockchain, this problem is kind of solved. We have blockchain technology to implement smart contracts. So smart contracts are also in the public debate and the political sphere. We hear a lot about blockchain, maybe less so directly about smart contracts. You hear a lot about blockchain, crypto assets, cryptocurrencies, crypto exchanges, you name it. And you remember the slogan, for those of you who are here like us in Switzerland, the crypto nation. And you might get very angry about it in reality, because where are my daily payments in crypto? Where's my insurance in crypto? My very down to earth daily business and transactions. Where is it? Well, it's not there really. It's partially there perhaps, and we'll get into the use cases and examples later on. So it's really exciting to see what's coming, but it's not generalized. So, well, maybe it's more of a reality in Canton Zug. So good for you if you're in Zug, but here we're in Geneva. I'm in Geneva at least. We're still quite far from it. So I also mean that governments, local governments here in Switzerland, we have cantons, cantonal governments, public authorities, their administration, cantonal banks, they also have an opportunity to switch to more of blockchain and more of smart contracting. And again, this will be discussed with Gabriel Jacques later on. So let's have a little common thought experiment. In the world of music, and I think we'll hear a lot about that. I mean, everybody listens to music and uses the platforms, and we're all kind of familiar with that. There is in the music business a middleman as well, and these are the platforms, and the platforms we all know, and they actually prevent a true peer-to-peer transaction, even though originally this was also called peer-to-peer. But actually, the current platforms, they are the intermediaries, and they are these well-known online platforms that we're saying. They collect a significant proportion of the value, that is the cash, but not just the cash, what actually a creative artist would receive with the smart contract solution. Basically, the producer artist would receive more with smart contracts, with the cutting out or at least reducing drastically the intermediaries and the share that they take. So that's the idea, basically. Yeah, smart contracts reduce transaction cost of companies, and this is the contrast. According to what we know today, is that we would have, if smart contracts are to generalize, an increased value, an opportunity for creating increased value for individuals, for users, for suppliers, via these more direct P2P transactions. So today we have intermediaries, but we have digital online intermediaries that we know very well: Uber, Airbnb, YouTube, you name it. That's I would say our current reality on a larger scale. I would say. Note that smart contracts, at least for now, they do not replace traditional contracts. They are complements to traditional contracts. They are self-executing through programmed codes, right? So we should dare those futuristic questions. We should ask those futuristic questions and dream today and this evening. We don't want just micromanagement. We want meaning. Yeah. What does this all mean? What does this stuff all mean for your business, for fintech in particular? So what are the new business models, the new structures, the new organizations, even though the whole economy might be structured differently if smart contracts are to multiply? How a society, the market, and the behavior of business actors, business players, yeah, like large industrial companies, service companies, banks, auditors, insurance companies, and of course government and administration. How is this changing, or will change? How is this going to change if smart contracts multiply? And same for the regulatory framework. Yeah, how is this going to evolve in this new era? Yeah, to frame the economy and society if smart contracts multiply. So we have a long-term question here, and let me maybe adapt the picture as well. So we have a long-term question here, and so the considerations, I would say the basic considerations for businesses are your models, your transaction models, even your business models, that is how you make money, your profitability, disruption of certain activities. It concerns places where transaction costs can be reduced and even eliminated through smart contracts. So intermediaries too, these intermediaries we mentioned, they are concerned as well in their own business, because things don't happen overnight. So there will be an adaptation there as well, especially services like auditing, like traditional banks. They're new models that they could develop over time. So will these services simply be delegated to smart contracts? Question mark. Or as soon as the critical mass and the technology allows it, will be just outdated, delegated to smart contracts? Maybe, maybe not. We don't know. So there's a question mark there. So even firms, businesses, even governments, they will probably evolve towards a more automated networks. And, you know, where contracts are a reality and every transaction is actually a contract. So if you adopt smart contracts, you might adopt a lot of them in very different fields. And logically, what's the consequence? That these structures, these organizations, as we've known them, they might disintegrate, they might become smaller, yeah? And that's what I was meaning at the beginning, that the whole structure of the economy might change because of that. So a last word on ethics, critics, and politics. You know, in law today, or in the legal realm, and the speakers after me will detail this, you know, it's based on what? It's based on human intention, yeah? We talk about human intentions, about human circumstances. And this is what we know today. In smart contracts, what do you have? You have facts coded in smart contracts. So, you know, am I late with my payment for a good reason? Could be an example. Yeah. In today's framework, we can interpret those things. We can get away with human, let's say, mistakes or circumstances, and they are interpreted by humans. And this is in the legal system. It's very much established. Will be the case with smart contracts. Yeah. In case of artificial automation, if you don't pay your rent, your door just gets shut down, and you can't go home, or your elevator is switched off in your house. So what will happen? These are again many open questions, and by the same token, this, you know, really leads to the political and the regulatory framework, which will have to evolve in order to be up to date with those new questions. And actually, smart contracts have not been on the political agenda as such. They have been on the agenda indirectly only with blockchain and DLT, the distributed ledger technology aspects of the latest, you know, revisions of laws and regulations in this country, at least. So standards, you know, we'll have to develop new standards, and these will also be discussed in good old politics. So thank you very much. And the next speaker is Gabriel Jacques, and I'm going to leave him the floor. Gabriel Jacques, you can come in.
Hi, can you hear me all right?
Yes, very good, yes.
Okay. Share my presentation. If it works. Sort of presentation on the, wait. Here.
Not really.
Wait. I'm sorry, I'm having a technical difficulty right now. My presentation on the does not.
Yeah, you should stop your presentation, I think. Yeah, now it's better.
Wait.
Yeah.
Maybe can someone share my presentation, because I have a technical difficulty and I cannot see it on the proposition. That's strange. Can you see it now?
Yeah, we can see your screen. The fact is you have shared your screen, you have to share the window. So when you go back to the share button, just select a specific apps. And then you will have only the one that you want.
Here you go.
Yeah.
I'm sorry for that. It was very long. I'm very sorry for that. It's absolutely the technical difficulty we'll find in smart contracts. I'm very happy to be here. Thank you, Olivier, and thank you, Gabriel, for organizing this event. So shortly about me, I'm a PhD candidate at the University of Geneva, and I'm the co-chair of the regulatory working group at the Crypto Valley Association. If I have to sum up my mood right now, I'll say just one word, that is bullish. And I hope you guys are too, because smart contracts are here for I believe, a long time. I'm an academic researching on those issues right now, so I pretty much know what I'm talking about. And I'll show you why. So what I want to do with you today is I'll just have a very small time slot. So I'll just deep dive into what is a smart contract in a very few words for those who do not really know the definition. I'll talk very quickly of the use case we have in finance that may raise your question and that we can actually discuss afterwards. I'll just discuss briefly also the regulatory framework we have in Switzerland. And I know also many other jurisdictions. I'm very familiar with the Liechtenstein law and Maltese law, European law, US law, you name it, with regard to blockchain in general and smart contracts. So if you want to have a comparative view over what is done, it would be a pleasure. And we'll just sum it up with some key takeaways. So I believe it's all good presentation begins with a fair amount of definition. And smart contract is actually not very well defined, because when we talk about smart contract, we usually talk about it's a technical term. And that was one of the problematics that Nick Szabo had, and that he regretted afterwards when he realized that he called his program a smart contract when where he actually meant a smart agent. And that's the first key point that I want you to figure out and to remember with regard to smart contract. When we talk about smart contract, we're actually relating to a technical term. And we're not hence talking from a legal perspective. And I believe the whole point of the game we have today in blockchain, it's really about bridging legal, technical, economics together so that they create a valuable system. So that's my first point, to say that we should always get back to the vocabulary and remember that when we talk about smart contract, we usually talk about a technical term. The usual say with regard to smart, they are neither smart nor contract. They're not smart because they do not think, or they do not have some kind of a technical features like AI would, for instance. Present a situation and they would adapt. No, a smart contract is not smart because it only enforces the code it has in its log, in its back. So that's my first point. And the second point is to say that a smart contract is not always, and most of the time, not a contract. And just to give you a few definition of what is a smart contract, you have here the first definition given by Nick Szabo in 1995. I'll leave you a few seconds to read it. And you have in 2021 the definition from Consensus. And this is very interesting because you can see that the definition of smart contract is actually moving in time. It's actually moving in time, and it's actually moving depending on the platform you use it. And so if I want to sum it up with regard to what is a smart contract, actually, let's just say in one word that it is a program on a blockchain. Usually people try to make a fuss and use some fancy words to describe something that do not necessarily need to be complicated. A smart contract is only a program. I'm not a technical. I'm specialized in smart legal contracts, and I'm specialized hence in smart contracts embedding, reproducing, or performing actually what we call a legal obligation that we can find, for instance, in contract, that we can also find, for instance, in a decision during a decision-making process. So if I want to answer this very broad and small question that is actually not very small at all, that is, what is a smart contract a legal contract? It would be like comparing the notion of contract when we write down some words on a sheet of paper and comparing this sheet of paper as an actual contract. The sheet of paper is not a contract, and the program you have here on a blockchain that embeds and that may perform some legal obligation, is neither, and it's nor a contract either. So I believe it's interesting to give you this angle because we kind of touch from the bottom of the finger the real point of what is actually a contract. A contract is something that is invisible, that is not something that relates to actually the technical world, but that relates to the world of the law. So I believe it's interesting to see that smart contract is actually never a contract, but at best it is the program that perform the legal obligation. Many people had some ideas with regard to the application of Nick Szabo. I'll let you a few example of what they are. You usually have them under the format of a protocol. So it's you have, for instance, Makerdale or Aave. Those are dedicated blockchain for lending, and they have very specific use case. What I believe is interesting to note with regard to smart contracts is when you compile many smart contracts together, they can create some kind of a decentralized platform, for instance, PancakeSwap. So you can see that it's actually an abstraction right now. It's actually accumulation of contract of program together, creating a unity. And I believe it's an interesting perspective to have also with regard to the use and the vision we have on smart contract. So the financial use you can have for them are decentralized platform, the securitization of rights, lending platform, and I believe that Mr. Bonf will really discuss those aspects. You also have, for instance, NFT tokens. If we take back this notion of definition between smart contract and smart legal contract, when you deploy an NFT token, you usually deploy a smart contract that is a program dealing and handling the NFT, and so you deal basically with smart contract. So yeah, that is one of the use, for instance, that you can have in finance if you want your NFT token related to art that is meant, for instance, for crowdfunding your song, is sold to the public as a securities, for instance. So that could be one of the potential use. You can use also a smart contract to perform legal obligation. For instance, the settlement of an obligation. I give you this token, you pay me that. That could be one of the easiest type of application that you can find. One of the example that we have today that is very difficult to assess also from a legal perspective is the one from Makerdale. So you basically have the few key points in the timelines that are used in this platform to create a financial service. So basically, Makerdale is a protocol that enables you a collateral, for example, Ethereum, and receive part of the locked up value in a specific stablecoin value that will enable you to purchase some goods, services, or else. What is interesting in this regard is that the whole process of deciding the interest rates, deciding the type of loan that are accepted, the collateral, etc., are actually decided over a governance token that is released and that anyone can buy. So that's very interesting to see. If you have a few minutes, or if you're yourself on your computer, I believe that it's a fictive situation. Have a look at Makerdale, and it's an interesting key point to have in the use of smart contracts in finance. I'm almost running out of time, so in very short, I would like to introduce you the complexity that we can find with regard to those contracts. First, we have the question of how to apply old models, old law to new models, with some question relating, for instance, to identity. How do we over a blockchain? What is the object of the smart contract? And for instance, when we look at the token, recently we saw that Goldman Sachs said that Bitcoin, for instance, was a new asset class. We have dozens of new people trying to define every day the object of the smart contract and define new type of embedding into a token. So it's very difficult to actually compare this new type of goods in the end with the good old physical goods and the physical object world that we know of. So yeah, it's one of the big questioning that we have sometimes in this regard. The question of manifestation of will is also very important. And what is of utmost importance with regard to finance is also how do we regulate those kind of activities. And those days, some of the criteria that are actually very very interesting to look up are the question, for instance, is whether or not, for instance, a smart contract that you might control, if someone puts some money in it, some digital money in it, token, would it constitute a deposit? Is the simple sphere of control limited or overall would be sufficient to consider a deposit or not, for instance, with regard to banking law? So yeah, I don't want to get into too much detail. I'll give you the chance to discuss about this and to ask questions about this, but that's one of the questions we have today, and that the technology bring one step further actually. Of course, one of the important point also is to know whether or not you have personal data in those smart contracts or on the blockchain. That would be actually, as you know, kind of problematic with regard to General Data Protection Act in the EU or in Switzerland. In very, very short, I'll just highlight to you that we in Switzerland have many interest for those DLT and securities and token securities, I would say, question, because our parliament is constantly bringing new object to the attention of the plenary. We have in Geneva a motion, blockchain motion for Geneva that is on the way, that I wrote personally, that will be presented very shortly to the parliament. And on the 1st of 2021, we have a brand new system enabling us into our private law to embed any kind of contractual right within a token. So the key takeaway, and I'm sorry if I was a bit fast, but there is lots of content, as you can hear. The key takeaway that I want you to take from this small presentation is that smart contract is not a contract. It's a technical term, and it usually does not relate really to a legal perspective, especially when those talking about are technician. what I want you to take away also is the fact that we are now in this situation with DeFi, especially to offer some promising new model or revisit some traditional models. For instance, the whole model of the settlements, international payment settlement, for instance. So that's a very interesting new step that we can take thanks to the blockchain. Sorry. And last but not least is that blockchain raise many and that relates mostly to the fact that it's a very immature technology for now, and the question we have are kind of unseen as we can compare it to what the traditional finance has seen before with regard to the dematerialization of the securities and stuff like that. It's a really new type of legal question that we have to figure it out as jurists, and that is all just as much as a fun challenge that it will be vital for this technology to actually break out in the real world. So I'm pretty much done with my presentation. I'm happy to answer your question and discuss with you further all those programmatics. Just to give you a quick recap, so I'm a PhD candidate. I'm co-chair of the regulatory working group at the Crypto Valley, and I just launched a company that is based in helping people just implementing blockchain within their contract and their smart contract. So that's all for me. I'll give you the floor. I'm sorry if I was a bit long. Thank you. Gabriel? Yeah.
Yeah, so I'm back.
I give you the floor.
Thank you for your presentation and contribution, Gabriel. So now we will go to the next, over to Fabio Bonfiglio. Fabio Bonfiglio has expertise in digitization, smart contract, and also decentralized autonomous organizations. Welcome, Fabio, and I hand over the screen, which are yours.
Hello. Hello, everyone. Thank you for having me tonight. I won't be too long. I will present you. I will share my screen first. Here it is. This is the agenda I have for you tonight. I've been asked to demonstrate some existing application of decentralized finance that is using smart contracts. And I will demonstrate essentially the Makerdale that Gabriel just spoke about before. Quickly about myself, I'm not coming from the finance world at all. I've been for 20 years in the industrial automation as a developer and project manager. And I specialized myself in the smart contracts about 4 years ago. I put specialized in quotes because it's a very new field of activity, and I think everything has to be researched still, and yeah, we are only at the beginning of something very new, and that will bring a new paradigm. I'm also the president of the NEDAO Associations, which is a project in Neuchâtel about building a demonstrative platform on how to use smart contracts and interact with smart contracts, and also about the subject of decentralized identity. And I worked for various companies like Boxler Finance, and also on a project called Origin, which is building a protocol for authentication of luxury goods and with the NFTs. Actually, these slides are coming from our workshop I did with Microcity, and there are, I think, probably quite 100 slides. I won't go through them. It's only for the presentation, but before I go to the demonstration, I just wanted to show you, to explain to you what is exactly a DAO. And yeah, I won't go through this kind of slides which explain the technical details behind smart contracts, but about DAO, that's an interesting subject. And if I can find the slide, here it is. So, sorry, the slides are in French, but a decentralized autonomous organization is a set of different smart contracts which have different functionalities, and these smart contracts interact between each other to modelize some kind of organization. And yeah, that's the point. We can modelize various kind of organization, and there can be associations or even companies or funds, or I have a few examples here. A multi-signature or a company board that is modelized. Fundraising scheme, fully automated with protection of the investors, or even trust, fully automated trust. And in decentralized autonomous organization, the word autonomous is here to indicate that this is not an entity that is intelligent, as Gabriel told before. We don't have artificial intelligence in decentralized autonomous organization. We only have some mechanism, like in a watch, that are tailored to execute some automated functions, and the sum of these mechanisms generates a functioning entity. And I talked to you about that because even in Makerdale, you notice that in the name Makerdale, there is the DAO also. And in nearly all of the decentralized application, you'll find in some kind of DAO is behind to manage the governance and the evolution of the platform. So with DAO, we can have some kind of administrative and financial automation, and that gives you some idea of what is possible with smart contracts when we speak about DAO. I will now quickly jump to the presentation, to the demonstration of the platform, so you can see with your eyes how we can interact with smart contract, because it's always a little bit abstract. Here, I am on the Oasis.app platform, which is the front end for the Makerdale platform. At the origin, the first purpose of Makerdale was to establish a stablecoin. Stablecoin is a kind of cryptocurrency which value is fixed, related to a fiat currency. In the case of DAI, 1 DAI equals $1. And don't ask me how it works exactly, because we will need a few hours to go through all the different smart contracts and mechanisms that make it work. It's fully automated and fully decentralized, we can say. There is a DAO behind it to govern and decide the change in the protocol. But the first function was to offer a stablecoin. And then around that stablecoin, other smart contracts were implemented, and to offer a full platform of lending and borrowing, and also savings, because you can put collateral without borrowing, and it gives you some kind of interest in return. So here I have my front end, and the first things I need to show you is the wallet here. I have an extension in my browser that is called MetaMask, and that is a wallet. And what is a wallet? Quickly, is a kind of software that is which purpose is to manage for you your cryptographic keys, so you don't have to remember complex and very long keys. And if I unlock it, here it is. I can now connect the platform to my wallet here. Okay, so in my wallet I have different addresses, and on this wallet I can choose the network on which I will interact. Here I have the Ethereum mainnet, and you can see I've connected on a test network, which replicates the behavior of the main blockchain, of the real blockchain, but with fake money, basically. So I have 20 Ethereum here on the Kovan test network, so I can show you how we can interact. In a wallet, I can have several accounts, and here I've choose one on which I have some funds to show you how it works. So. On this front end, we can see that we have several different products, let's say like that are offered. These are vaults in which I can put some assets in collateral, and then I can borrow value in the form of DAI to fulfill my need. I don't know, but the various sort of vaults that are offered only vary in the minimum collateral ratio they ask. So you can see that the cheapest it is and the more risky it becomes. But let's open this kind of vault. So the first thing that the platform asked me is to sign a message to just to prove that I am in control of the private key, the private cryptographic key I will be using. So here I have my oh, you cannot see the. Okay, I have a pop-up that appeared here on my screen asking me to sign some data, and I only click sign, and okay, I have here a small checkbox to accept the terms and continue. So I've transmitted a digital signature to prove I'm in control of my private key. And now what I can do here is deposit some value. Okay, I will go another. Yeah, sorry, I'll go on with this one because I've clicked on another one and I don't know. Okay, this one is better. So I can deposit some Ethereum. I have in my wallet currently nearly 20 Ethereum. I will deposit 10 Ethereum as a collateral, representing about nearly $30,000 at this time. And here, he asked me to create a proxy first. A proxy is a kind of intermediate smart contract that will serve me to interact with the main platform. Again, that's a shame. You cannot see the pop-up here. I have a pop-up asking me if I confirm the transaction on the blockchain, and I can see on that pop-up that no value will be transmitted at this stage, and I have only a transaction fee of 0.004 Ethereum that need to be paid to the network, and actually it's nearly 10 euros. So it's a transaction that can be expensive. At this time, the blockchain, also the main network, is pretty busy, so the transaction fees are high. And now I click confirm, and we have to wait that the transaction is transmitted to the nodes and included in a block. It can take up to 15-30 seconds. One block is every 15 seconds on Ethereum. So I received a confirmation. I can actually go there and see the transaction on the blockchain on what we call a blockchain explorer. Etherscan is a blockchain explorer, but I'm on the Covan version of the blockchain explorer, as you can see here. And the transaction was actually included in a block, and already 2 blocks ago. And so I should be able to continue here. So now I have deposited here 10 Ethereum as collateral, and oh no, okay. I know I've not deposited here. I've just generated the transaction for the proxy, and now I confirm that I want to deposit 10 Ethereum as a collateral. Again, my pop-up appear to tell me that 10 Ethereum will be transferred, and I have a small gas fee, again, nearly 10 euros of transaction fees. I confirmed it. Okay, it was quick this time. And if I go to the vault, okay, I can see that I have 10 Ethereum as a collateral locked. And now going on, I can generate DAI. If I need to borrow some value, I can, for instance, ask for 5,000 DAI, which is equivalent of $5,000. And I can see here that the collateral ratio for this amount will be more than 500%. So it should be pretty secure. And the liquidation price is to $550, which means that if the Ethereum value goes below that price, my position will be automatically liquidated, and my whole collateral will be eaten by the platform. So I confirm. Here. And I can check in real time where am I with my collateralization ratio if the value of the Ethereum goes down. And if I'm not ready to pay back the amount I borrowed, I can simply put more Ethereum in collateral if I have still some Ethereum, or I can pay back simply the DAI I borrowed. And if I'm being liquidated, I will have to pay an additional penalty of 13%. So what I've just demonstrated is that in a few clicks, I've borrowed nearly $5,000, and I've still the entirety of my position in Ethereum, because I didn't have to sell Ethereum to access this cash. Now I will have to go to a broker like Kraken or BT to convert this DAI in Swiss francs, and then be able to spend it on Galaxus or at the Migros. So I think there's not so much more to show you there. Yeah, I can pay back here, and this will generate another transaction. If I go to my wallet, I can see that if I go to assets and I search the DAI symbol, it should. Oh, okay, it didn't find it. So I can go to activity, and if I search for my transaction on the blockchain I just did, I can see with that transaction the contract with which I interacted. And if I go to that contract, actually that's not the main contract holding the tokens, the DAI tokens. That's one of the contracts that is used by the Makerdale platform. And I can actually read it because the original authors of these contracts have published it on the Etherscan platform. So that's the original code of the contract. But even if the original authors didn't publish it here, I still had the possibility to read it, to read the bytecode, let's say like that, on the blockchain, and kind of reverse engineering it to know what this contract is supposed to be, and verify that the contract will do what is supposed to be to do. So that's it for the Oasis platform. There is another platform that's interesting, but it's basically exactly the same purpose. It's the compound finance, where I can put some diverse kind of cryptocurrencies or tokens in as a collaterals and borrow other tokens in exchange. That's it for the demonstration. I can speak about some framework about DAO. There is something interesting you can dig in if you are interested. That's the Aragon platform. That is a sort of framework for building your own DAO and manage your association or whatever with that. And it will be running on the Ethereum blockchain and fully decentralized. And that's the point of this platform, is that even the Makerdale, even this front end, if the original authors or the current maintainers of the platform were I don't know, arrested or censored, this platform will continue to function and to go on. And that's one of the key points of the whole blockchain technology, and it's that it's permissionless and not censorable. I see Gabriel connecting, so it means that I'm out of time. But I think I've shown you everything I have to. So I hand over the floor. Thank you.
Thank you, Fabio, for this presentation. And now, as we're running a bit out of time, we still have the panel discussion. I will hand over directly to Julien Guiton. And Julien Guiton is the CEO of Condensat Technology. Welcome, Julien, for this event, and happy to discover what you have to.
So, hello, I'm Julien Guiton. I would like to thank you, Olivier, Gabriel, and Fabio for your interventions. I'm happy to participate in this kind of online conference. So I am the CEO of Condensat Technologies. It's a company that helps banks, funds, and family offices to get in this crypto space. So basically, I'm doing workshops with them, trying to explain them how it works, how did we get to this kind of technology, where does it come from, and how to use it. And then I help them to write some compliance documentation, governance documentations, and at the end, how to implement it. What kind of hardware do you need to implement it? So this is a lot of work, because there is a lot to teach about this kind of technologies. Today we are talking about fintech and smart contracts. Where are we? Especially smart contracts. And I was thinking of talking about a new protocol, which is called RGB protocol. And it's a protocol that works like Ethereum, but on the Bitcoin blockchain, and it can do the same contract functioning as Ethereum. It works the same way, but this is in a far more private way, meaning you don't share your data and you don't leak your data over the chain, and you have the responsibility over your own data and how not to lose money. You are responsible. But I won't speak about RGB because all the talks I heard are very, very interesting. There is something here. So I heard first Olivier told us that it's about speed and costs. And yes, I'm an engineer with 20 years of experience, and I discovered Bitcoin in 2011. Yes, okay. So it's about speed and cost in finance, and he's right. I'm working on speed and costs. So when I'm working with banks and funds and family offices, I work with them about costs. Most of it is cost because retail banking is in competition with neo-banking, so they have to work on their costs, and our technologies and smart contract technologies can be a solution for this. So we have to work with them on this. And he told about how to an example on smart contract and what is this about. Sorry. And Gabriel told us that there are some unresolved legal questioning, and he's right. I'm facing it every day with my clients. And Fabio showed us how it's implemented by the engineers. Fabio is an engineer, I am an engineer, and this is the way we are implementing it. But there are questions, and today I think I will share my experience. So the first time I connected to the internet was in like 1995. So I'm an old internet user, and all this revolution, all these technologies, smart contract technologies, they are coming from some people, from us, and we are not people from finance or legal teams or that kind of thing. And we bring this kind of technology in a way, and we have to discuss it with you people who are listening, who are in finance and legal entities and that kind of business. Before Bitcoin or Ethereum was a revolution, internet was a revolution. And it's about information and data and all the information when we have about ourselves, and we have problems with Facebook and Google and that kind of companies with our data. We don't want to share too much data. And because of this, we try to hide it. So that's why there is cryptography in computer science, and we use it in smart contracts. And in cyberspace, in the cyberspace, internet, there is no physical violence. So to enforce contracts or to settle things or for judgment, there is no way to force people physically. You can't punch somebody in the face and over the internet. You can't put them in prison because they are anonymous, because they want their identity to be private. And this is, from my point of view, the thing of smart contracts, because traditional contracts, yes, they are about what we do when the things goes bad. Because when the things goes good, we don't talk about the contracts. We read the contracts, how we did a bad thing, what is written in the contract, so that we settle the argument. But because in the cyberspace we can't enforce the thing, the smart contract is a way to enforce the thing. Meaning you put your stake inside this technology, and it's about money. Contracts are a lot about of money, and it's a way to smoothen the settlement of arguments. So yes, contracts, smart contracts are not contracts, but it's a different way to enforce them. So for companies using this kind of technologies and that are interested in smart contracts, they need to learn more about the history or where does it come from, because all the rules of internet are not the same of the rule in the world before the internet, and it's all about data and enforcement of legal questions and contracts. So I will be quick because we are late, but this is the ideas I wanted to share with you because there are so many things to discover with this kind of technologies, and they are really changing the world. And yes, we can talk about technologies, we can talk about a lot of things, but a part of my job, and I think Olivier, Gabriel, and Fabio they also are working on this. We want to share our experiences and how we see this world changing, and we are trying to bring us in our car to go to the future. Thank you.
Excellent. Thank you, Julien. Thank you very much. Excellent timing. You would have a few minutes, but we can catch up with the panel discussion now. And you would have more time there, of course, to elaborate on some of the fascinating points I think you made, really, regarding enforcement and to what extent smart contracts actually help this new kind of enforcement when it comes to settlements and differences and problems and questions and non-execution between parties of a contract. So, wow. Yeah, I really enjoyed all the speeches. So we have a few questions in the chat. Maybe I would ask the speakers to come online with the camera. Yeah, Gabriel Jacques, Julien is fine. Fabio is back. Very good. So I know you had some exchange already in the written chat. Now I'm asking everybody to gather your questions in the Q&A tab under the Q&A, not in the chat, because we're going to quit the chat now. We're going to focus on a Q&A. But there was some points made in the chat as well. So I'm going to start with that, even though I think partially answered in writing already. There was from Françoise to Gabriel Jacques about AML and KYC regs, most blockchains involving payments of funds. Blah, blah, blah. You remember the question? Sorry, I don't have to read it out again. Do you want to answer?
Do you want me to answer directly by voice? Okay.
Yes.
In short, the question was KYC requirements due to the fact that you use a blockchain or that you use a smart contract. And the reality of today's regulation is that it's quite unclear because we have this brand new DLT law. And basically, they are kind of revisiting this notion of control, because usually when you have a KYC requirement, KYC obligation, is the ground reason for that is that you can actually control the funds. Mm-hmm. The question that has to solve the legislator, and it's not yet solved definitely, is whether or not if someone controlling, for instance, with a multi-sig wallet or stuff like that, from far away, let's say, a smart contract that controls the funds could actually qualify as a KYC agent. But we need to be very clear. The reality is that the law is made to actually find some liable person, some liable stakeholders, because otherwise they would have no one enforcing the regulation they set up. So in the end, the legislator is not really keen to avoid, or be keen to accept a fully decentralized system as falling off the power of the law. So, and that's something we can say with regard to for instance, the outsourcing of financial infrastructure. Some people try to outsource a settlement, for instance, via their use of blockchain. And basically, the legislator said with regard to the Financial Market Infrastructure Act that if you blockchain as an outsourcing platform for settlements or other stuff, then you will still be liable, and you will not be able to actually put the liability on this decentralized agent because they cannot really control it. So it's a case-by-case basis. Sorry that the answer was quite long, but it's a case-by-case basis. For now, what is certain is that any type of transfer involving, for instance, pure cryptocurrency, like just a value, abstract or not, would qualify potentially you as a KYC agent. So yeah, sorry for the long answer, but
no, thank you very much.
I'm jurist, so
yeah, no, you're not. So we're used to that. Don't worry. So the next one is for Fabio. With another type of answer, I suppose. So the question goes, if I understand well, there is a possibility to borrow real money based on other coins. Is interest rate the only advantage to do so?
In my opinion, yeah, interest rate could be interesting regarding to the price you can find in the market. But the main advantage of this kind of platform is that, as you've seen, it took me only 2 minutes to obtain that money, and there were no questions asked. I just had to put my collateral in it, and that's sufficient. That's the equivalent of I don't know in English how it's called, but in French it's the Crédit Lombard. That's the original kind of activity banks did in Lombardia. Some centuries ago. That was the core business of banks at the time, and now we have exactly that modelized in a smart contract. I come with an asset, I collateralize it, and I can obtain the money I need for my project, and that's it. For me, that's the main benefit in terms of efficiency, administrative simplicity, etc., etc.
Yeah, but now, I mean, let me just build on that. I mean, what about if it's not if I don't pay back, I don't pay the loan, then
I will be paying forever interest on that loan, and also if one day I'm liquidated, but I lose all my collateral, so I have no interest in doing that. I have to pay back one day, for sure.
But the time frame, what about how do you control the time frame? I mean, because in a real, let's say, face-to-face or physical situation, let's say within one jurisdiction, there would be, you could go to court, you could basically have different kind of procedures.
No, here is all about my collateral that could disappear if I don't behave correctly. That's it.
Okay, perfect. Okay, so I hope that answers the question. I'm sure it does. Now we have another one. Okay, there was a lot of questions on defining smart contracts again. I mean, I didn't define it too much in my speech because I wanted Gabriel Jacques to do it. I knew he was going to do it anyway. But it seems to be a lot of questions on that. So maybe we can elaborate a little bit on the definition back in the 90s with Nick Szabo, which we take as a point of departure. And then I think, Gabriel Jacques, you mentioned another definition.
Let's be all complementary, maybe, because we can highlight it by example. We'll give the legal definition. Maybe you guys can give a technical definition. So as a legal scholar, I would define it as as a program on a blockchain that actually enforce a legal obligation. So those would be the three characteristics. I cannot make it more simpler. I can make it more complex, but you've got it all in those three characteristics, basically. Maybe Fabio or Julian, do you want to complete it?
Yeah, Julian, perhaps.
Yes. For me, a smart contract is just a contract. It's not the same means. It's not the same. Yes, it's not paper. People ask if there will be no more paper. Yes, one day there will be no more paper, and there will be no more handwritten signatures. And our kids, they won't never ever work with pens and paper. This is the end of it. So what changes is this contract is a program, as Gabriel said. so it executes. And our consensus, blockchain consensus, is about how it executes. So this is a global system with a lot of people that are agree on how it works to execute things. So when you write on paper a contract, the people who are enforcing it and make it happen as it's written in the contract, this can be lawyers and judges and policemen, but it can happen in our world, in our internet world. So the difference is the contract will be executed. So when Olivier asked Fabio, oh, but what if you don't pay? And Fabio said, you get wrecked. You just lose your money. This is the law. You cheat, you lose. So yes, this is hard. This is more harder, but this is more just because everybody is at the same level. There won't be any cheating or anything. Smart contracts and blockchain technology is about not to cheat. Satoshi Nakamoto with the Bitcoin blockchain, the proof of work inside this or any other kind of proof of stake, proof of authority, proof of space, proof of anything. It's about how to be sure that nobody will cheat. So contracts are enforced by a consensus that everybody agrees on. So if you try to cheat, you will be ousted. You have to go away, or you will lose your money.
Yeah. Okay. So that makes it very, very clear. And from really the engineering and technology standpoint, I suppose. And to build on this, there's a remark. And actually, I told the public to make statements and comments and not just questions. You know, you can ask questions, it's great, but we're not at school. You know, we're not your teachers. So it's a really a dynamic conversation. So feel free to challenge things we've been saying. Or just come with complementary information. I think that's what happened with a remark we have there from someone, I don't have the name, who says regarding what Fabio said, old law was a Lombard lending, contemporary is margin lending, and now it is just with the use of new technology. You borrow against your existing assets. What do you have a reaction to that?
Okay, but in the traditional finance world, is it so quick and so easy to obtain, or maybe there are additional barriers? You have to be a qualified investor, and yeah, it's complex. I can imagine. So here, if I'm an entrepreneur and I have, I can fund a company. Block the necessary funds to have an SA, an anonymous or a limited liability company, and then I can take back these assets, convert in a collateral in this kind of platform, and have the necessary cash I need to buy tools, or I don't know, and yeah, my business can go on, and I still have my original assets, and it's really fast, and yeah. That's all about efficiency in my point of view.
Absolutely.
Yeah, may I add up something?
Sure.
I believe the example that Fabio just showed with regard to Makerdale can exemplify the fact that legal and technical really do not understand each other, because once you describe Makerdale, usually you said that it's a lending program, it's a lending platform. But from a legal perspective, if you have a lender, you know, and actually the reality of this transaction is not that much that someone lends you the money, is that the system creates and securitizes money from you. So we call it a lending protocol, because those who actually talked and developed this protocol are developers, not legal scholars. No. And from a legal point of view, you're much more near the scheme of actually what we could call créancier gagiste. I don't have the perfect translation in English, but someone who would actually lend you some money with regard to a collateral, and not that much of a lending contract, you see. And it would also ask the question whether or not you have a counterpart, because we all saw you entering all the information, and there is no as you say, legal checkup. And as we know, lending is very regulated, so you cannot usually you have to disclaim why are you needing this money. Do you want to are you a consumer, for instance, or do you need this money for consumption, for instance? And I believe it's interesting to highlight that we need to work on those things to make also the system viable from a legal point of view. And I just wanted to add up this, because I believe it was an interesting example.
Point to remind us in the demonstration, Fabio, is, there was no banker, there was basically no legal check, or very little. So the question comes up, what do you, what happens? This avoid this kind of a vacuum in the legislation somewhere, because we could do it. Yeah.
If I continued the demonstration, there will be some kind of security at the end, because at the time I want to convert the DAI in euros or in francs and cash out. I have to go through a broker, and by this broker I did the KYC, and this is where the link with the legal happens, I think.
But at some point, is this, do you think, Gabriel Jacques, this is a field where regulation and regulators and legislation will have to do something, because otherwise it would just get out of control?
We don't always need to highlight or to describe what there is, the phenomenon. Sometimes and most of the time it is the case, it falls under the contractual freedom. So basically, that's but that's actually the approach of the Swiss legislator, saying that, okay, you want to create your token, you want to create this contractual environment, for instance. It's possible up to the point it is regulated, for instance, under a financial law. And most of the time you don't need actually to create the details, because it could also be argued that it would hamper the development of those.
Yeah, and
would we have DAG if we had developed a whole model over a blockchain? And that's actually the question. The law is supposed to be neutral. Yeah,
it's in the two parties. Here the two parties are not the same as when I deal with a bank. Basically, all the guarantees and the collaterals and all that is basically the requirements of the bank. Whereas here, you just don't have the bank. So
yeah, but if we just see that it's not the same, and that you do not have the same legal protection, for instance, maybe it's enough, because then people can actually choose. And I'm a liberal, so I would love to have all the models here, and
sure,
people
and you
being able to choose.
And it's a free competition, essentially.
Exactly, and that's the whole thing. For instance, I'm working on derivative products right now, and there's this whole discussion with regard to whether you would acquire a derivative product or the part of an ETF, a regulated fund, for instance. And it's two different systems, and it does not give you the same security liabilities. And after a while, people just have to choose. One is heavily regulated, the other is like less heavily regulated. Two different products, and I believe that's the case, and that's.
Thank you. Yeah. Just for a last question from I think it's a very good one from Ang Chen, who's asking: is the developer of smart contracts legally responsible for the consequences of bug failure? If not, who will be responsible? So, any of you can take it.
I believe it's destined to me, but I'd be very interested to have the view on actually the developers, because. Long story short, I believe that and Julien could be of help in this matter. I believe smart contract is mostly also the grand opening of the open source, It's about creating the code that will be useful for anyone. And long story short, the answer is yes. You can be liable for a bug, but if you, for instance, license your smart contract under an open source license, then you can have maybe some lesser regulatory and lesser stringent regulation or liability that would apply. Yeah,
very complicated. Yeah,
but you can always be liable.
Yes, I'm sorry, I have to be harsh because Gabriel Lamont is going to come in as well.
I don't fully agree with Gabriel because when you have a bug and you invest money or do something with smart contracts or a platform with smart contracts, you do your due diligence. So you have to verify how things are. If there is a bug, then it's your loss. So if you want to enter this space, this new finance space, and it's about technology, you have to learn about technology and work with people that are able to watch what is going with these contracts and the execution of these contracts. So this is about auditing and verifying things. So in the current world, banks, we audit them. So a smart contract is like a bank. You have to audit it before putting your money on it or letting it function in the space you are working on.
I'll just add up in 1 minute before Gabriel. Just in short, if you have a developer with whom you have a contract, then you will be liable because you have what we call a contrat d'entreprise, working contract, and then he will have to do all the due diligence and the formal verification of the code, etc.
Makes sense.
I believe that what I highlight was the fact that that if there is like no contract, or if there is you may have a license, or you may have absolutely no contract, and in those cases you would have this extra contractual liability, and you will also need to have the fact that there is a causality maybe, and there is maybe also a liability because the whole code was illicit, and that would be hard to prove in short. But yeah, so
thank you very much. Thank you, guys.
So thank you all these contributors. Thank you, Fabio. Thank you, Gabriel Jacques. Thank you, Julien. Thank you, Olivier Narret and Blockchain Politics, contributing to this event, but yes, with a virtual background is a bit difficult. And now I hope that we help contribute to help the audience in understanding where we are with fintech and smart contracts. But I suggest now you go still ahead with discussion by going to the networking. So this is like a big meeting room, and I just that if you want to move from one table to another table, have a look at the seat which is the table, and just double click an available seat to join this seat, and then turn on your camera and your microphone. In addition, to conclude, so I was very happy to have you, all of you tonight here. Visit this website of the association, just connect with us, subscribe to the newsletter, follow us on the social media, engage on the social media, reach us directly if you have any of you would like to be involved with the association and the community. And so a big thank you, and now we'll switch and go back to the floor.